Good morning, good morning, everyone. Welcome to the Friday Eve edition of the Premarket Prep session. That unruly curtain just doesn't want to stay closed. I thought I got up and just closed it, but I'm not mad. We got sunlight shining through. It's a bright morning, an inspiring morning. Got back to the running trail this morning. Have been slacking a little bit this week. Got some pickleball in yesterday. Feeling good, feeling active, energized. And that's a great way to start off the day, right? With wins as you head into the market day. And got to make sure that we're getting better outside of the market because this week in markets has been extremely slow, but that's also been exactly what we expected and what was talked about last week on our live streams heading into the end of the week. And then this week, right? Starting the week, understanding that it would be a holiday shortened week. We wouldn't get a lot of volume. We wouldn't get a whole lot of fun movement. So everything this week is really playing it light, treating everything as a lotto, right? If you play something, play light size. But what's most important is going to be the end of the week. We've got SPY that has retraced weekly bull flag breakout at 524.61. So the weekly close will be very important. But as of right now, we're retracing a breakout level that could serve as major support, and we can start to see some right popping into the end of the week. So make sure that you're vigilant regarding that. That's something that I'll be watching. If we close over that 524.6, is it 1 or 7? 524.61 by end of market day tomorrow. Great opportunity for the market to continue to rocket higher in the coming month, right? We've got a nice weekly bull flag, so we know that's a larger size pattern. It indicates that we've been accumulating shares, right, over the course of a good long amount of time. And we busted through, the buyers did, and now they're regaining their strength before they continue up. If we don't close above that by the end of the week, then we can head back lower, right? But if we do close above that by the end of the week, we look good to continue to push higher in the market, to continue notching new all-time highs, which would follow the bullish tech sentiment that we've seen, especially when it comes to the semiconductor space. So welcome. If you're new here, this is our pre-market prep session. We go over the important news, notes, analysis each and every day that are key to making sure that you succeed in markets more often than you fail, right? You either win or you learn. You never fail until you quit. So we're always committed to winning or to learning, and that's what we do here each and every day. And that's brought to you by the first live event that we will have of the year. Might be the last. I don't know. Not sure yet. But it's the Kaizen event, online learning event. Stocks on day one related to AI, this next wave of AI stocks, and then day two and day three is going to be all artificial intelligence. My favorite tools, how to use them, how to get the most out of them. Tools for cold lead generation, to replace employees that you have, just different tools that you can use in a lot of amazing ways in order to save time, save money, make more money, right? And also spend less in terms of expenses. So doing what all of these big Fortune 500 companies are doing that's causing, their earnings to be in them to be able to succeed, streamlining, getting more efficient. That's what we have to do as workers as well in an era that's so competitive, because we're not only competing against people who got laid off of great, companies like Facebook and Apple and all this other stuff. But then you have, of course, AI that you're competing against, because each and every week there's new updates. And then you've got people that use AI in other countries that'll do what you do for less money that you're also competing against. So it's this threefold battle where it's like you've got, Jack, who's recently laid off from Google, worked there for 10 years, right? And now he's come along and he's on the market, and your company's looking at him like, wow, this guy worked at Google. And then you have, this new platform that's arising, so and so AI just updated it. And now a lot of what you do day in and day out could be automated in terms of workflows, which means no more you, right? That's tough. And then you also have so and so in the Philippines, right, who spent all their time since this whole AI boom happened learning about these different tools. And they'll do what you do more efficiently, right? They'll do the job of your department for much less money. So there's all these different things happening. And whenever things are happening and people are mobilizing, you've got to make sure that you're mobilizing as well. This isn't something that's important for the future. It is the now, right? It was the future back when ChatGPT first dropped. It is the now right now, right? Because each and every company, this will majorly overhaul all of their different workflows. And you can be the person that does that. You can be the person that says, hey, I actually know how to automate XYZ that we do now. Let me do that. And you go, okay, cool. And you're the person that brings it in you introduce it to the company. So what do they see you as? The figurehead. They're like, oh, this guy brought us into the future. We got to make sure that we keep him around, right? Or keep her around. That's who you want to be, not the person who's like, oh, I'm going to give it 6 months, right? And see what happens. And then someone else does that. Or they just come up with another update that automatically the AI just goes out across all platforms of your company. It looks at everything that you do and then it figures out what can be automated. And then it creates bots for those workflows. That's where you don't want to be. Because at that point, you've outlasted your usefulness, right? The time in which you could have used AI to get a level up has passed because AI has leveled up past you. So you want to use this in between time that we have, right, which is growing smaller and smaller, to level up using the tool before the tool gets smart enough to level you out. And that's what this Kaizen event is all about. So we've got the early bird sale that ends this week. So don't sleep. That's over. Save yourself some money. It'll be worth it if it was 5 times the cost, anyways. But it's always nice to save a few bucks. And other than that, let's get into what we got going on today. This fine Friday Eve, we got some news. We had some earnings. Let's dive into it. Our top news: private credit. There's an emerging asset class that has grown from around $250 billion in 2010 to around $2 trillion today, and it is set to expand by double-digit percentages in the coming years. The private credit market consists of private loans made by funds to privately owned companies, with money originating from sources like pension funds, insurance companies, endowments, and foundations. Private credit also leans heavily on direct lending and one-to-one relationship compared to traditional loans, where money that is lent out is funded through bank deposits or is syndicated among a group of investors. Now, why so popular? In the aftermath of the banking crisis in 2008, the Fed drove interest rates to zero, driving all the players in the market to compete for the same small number of assets that had any yield. This created an environment where alternative investments could gain an edge, while at the same time, the big banks pulled back on the riskier areas of lending due to increased regulation and higher capital and liquidity rules. It was a part of a plan to move risks out of the banks where taxpayers have protection, and eventually saw private credit morph into one of the hottest investments on Wall Street. As investors want more of it, the warnings have grown louder. Back in November, UBS chairman Colm Kelleher said there was, quote, clearly an asset bubble going on in private credit. What it needs is just one thing to trigger a fiduciary crisis. The IMF also warned that the market needs more scrutiny due to liquidity demands as well as the quality of borrowers. The latest to weigh in on the industry is JP Morgan's Jamie Dimon, who noted that, quote, there may be problems here, but, quote, I don't think it's systemic. And the bank would even contemplate investing up to $200 billion in private credit deals off its balance sheet. So what to watch? Private credit wasn't disturbed when rates took a turn higher in the fight against inflation as the loans carrying float interest rates. However, there are fears that this can eventually hurt borrowers overwhelmed by higher payments, especially if there's a severe recession or if it is compounded with other governance risks like weak underwriting standards and a less liquid or not so transparent environment. Those in the private credit industry say their matched funding model is more secure compared to traditional banks that lend long slash fund short with deposits and can experience a run in moment of crisis, while it is also a source of credit creation that can support the US economy. So, I mean, kind of a little piece of information that doesn't really affect us at all. And I wouldn't, consider as being too important. So, it's cool knowing about that, right? Private credit and private equity and all that, but it's not something that is, directly going to affect markets at all. And I feel like this is the classic like headline story of a slow week, a slow holiday shortened week. Media news: selling out. Nelson Peltz has reportedly sold his entire stake in Disney, making about $1 billion on the position just weeks after the activist investor lost the most expensive proxy contest ever. Yeah, he pretty much came in, tried to reshape Disney, had this proxy battle, was fighting for board seats, the whole like Succession, if you guys watch that whole Succession type vibe. he failed, and now he's out of Disney, right? He sold his shares and he's leaving after not being able to take over. Disney's proposed slate of directors was reelected to the board at its annual meeting in April, beating a pair of rival slates from Peltz's firm Tryon Fund Management and Blackwell's Capital. Quote, while we are disappointed with the outcome, we are proud of the impact we have had in refocusing this company on value creation and good governance, Tryon said after the vote. Disney shares are up 12% year to date compared to the 10% return of the S&P 500. Yep, Disney had done great stuff for us this year, and I look for them to continue to do so and get back on track. Energy news, power projects. The White House is throwing its support behind building large-scale nuclear reactors, announcing new measures intended to accelerate their development. The last commercial-scale nuclear reactor built in the U.S. In the U.S., Southern Co's Vodal project was more than $16 billion over budget and 7 years behind schedule. We call that a catastrophe. The Biden administration said nuclear energy is needed to meet climate and clean power goals, but a dozen reactors have closed since 2013, losing out against cheaper power from natural gas and renewable energy sources. Tech news still searching. Google has confirmed to The Verge that the 2,500 leaked internal documents with details on data tracked by the search giant are authentic. The files contain info on Google's secret algorithm for ranking search results, which, along with its testimony in the DOJ antitrust case, shed more light on the kind of data the leading search engine collects and uses. Quote, we would caution against making inaccurate assumptions about search based on out of context, outdated, or incomplete information, Google spokesperson David Thompson noted in his statement. Yeah, Google had some internal documents leaked. I don't know if we'll find anything fun or spicy in them. We'll have to wait and see. Today's markets looking mixed across the board here. It is worth noting that London and in Europe they opened red and then now they are green. In Asia, Japan down 1.3%, Hong Kong down 1.3, China down 0.6, India down 0.8. There's some stuff going on in Asia that's kind of native to them that is causing this. I read when I woke up. In Europe, like I said, they're actually up slightly. London up 0.2%, Paris up 0.2, Frankfurt flat. Dow down 0.9, which makes sense. Salesforce reported earnings. They did not have a good result, right? I think they beat, but the stock dropped. And Salesforce is a heavy component of the Dow. So it makes sense that the Dow is down the most out of all of the major indexes. S&P down 0.4, NASDAQ down 0.3, crude down 0.3, gold flat, Bitcoin up 0.1. The S&P has risen since when that was reported. So we'll open up slightly red, but not too red. We're literally opening up right at this 524.61 weekly level. So that is our weekly bull flag breakout level. We got it a few weeks ago. If we can hold above that, S&P looks good to continue to pump right over the course of the next month. If we can hold above that by the end of the week, if we can't, then obviously can't continue to expect the pump. So we'll be watching watching to see if we can hold over this 524 to 525 area headed into the end of the week. And if so, we should get a continued or renewed rocket ignition. Today's economic calendar, we got the GDP data, 8:30 a.m. Didn't look at it, but apparently the market, must have liked it initially because we got a little pop right at 8:30. And tomorrow, I believe we get the biggest news, which is the PCE data. Today, pending home sales at 10 a.m., not a whole lot in terms of important data that we're getting here today. So we're chilling on that. What else is happening? Our rapid fire stock news rundown. Salesforce plummets on weak sales and forecasts. So it's dragging the Dow down this morning. Other direction, C3.ai, whose ticker is AI, soars as outlook tops estimates. T-Mobile, US Cellular, ticker USM, deal may see antitrust issues. Of course, U.S. cracks down on customs broker used by Shein and Temu. Sony in talks to buy Queen catalog for $1 billion. Queen, like the musical artist. BlackRock's IBIT surpasses GBTC as largest Bitcoin fund. More earnings. Abercrombie and Fitch, ticker ANF, rallies on record results. Abercrombie was all over the place in the stock market streets yesterday. with their big run after earnings. And then HP's PC sales rise after 7 quarterly declines. UiPath, ticker Path, plunges, CEO steps down, ex boss to return. And then unprecedented gap between Nvidia and the S&P 500. Yeah, for sure. If you look up, there's an ETF that shows like the S&P 500 is an equal weighted ETF, meaning that every stock has the same weight instead of Nvidia being worth, like 3 times what the normal stock is and it being weighted, right? If it was all equal weight, and the equal weight index has plummeted, right? Not plummeted, but it has double topped on the highs, but the normal SPY has not. So I think that's significant. And what it tells us is that there are only a few heavily weighted members of SPY that are keeping it propped up. But that's also kind of always been the way that it's been. So it's like if any of those members turn around, a la Nvidia, right? If Nvidia turns around, then we could have, the market get dragged down because the majority of the members of SPY are struggling, right? But if big tech keeps it up, it keeps the market propped up. But that's everything here today, May 30th, 2024. May is almost done, and we are about to enter the halfway point of the year. There is so much that has gone on, so much that has happened. And we started out this year outlining important goals that we have for ourselves, all of that. Now we're almost halfway through the year. How close are you to accomplishing those goals, right? How close are you to getting done what you said you wanted to get done? And if you find yourself not being very close, you still have a half a year left, but you already do have half that is getting ready to be done, finished, right? So make sure that you're putting yourself in the best environments in order to close the gap and get done what you want to get done to hit those goals, fiscal and otherwise, right? You want to hit those health goals, but you just don't have the time. There's an AI for that. You want to hit those mental health goals, but you just don't know what to do. There's an AI for that. You want to hit your business and professional goals. You don't know what to do. These tools are here in order to save you time, save you headaches, save your money. So learn how to use them. And then maybe that can help you supercharge the last 6 months so you can get accomplished what you want to accomplish. But everybody have a great rest of the day. Like I said, happy Friday Eve. I'll see you back here tomorrow morning for our last pre-market prep session of the week. Have a good one.